Live on YouTube.
Jesus was 33.
You're still doing that. Are we live? Hey, if you're watching this, you're in the pre-show. Welcome. I am here with Ed again. Ed, do you want to pull up your mug here? I just kind of picked for you today. So shout out to our sponsors, Startup Vitamins, gave these cool mugs. So you're bootstrapped, right? So
Yes, I am.
all right, and quality is the best business plan. I think we had this recently, but I like the mugs.
Yes,
right?
Nice mugs.
That's a nice mug.
So what's new, man? Tell me a day in the life of Ed.
Day in the life.
Right?
It's
It's
exciting.
party, beach, party,
Yeah.
work for 10 minutes,
exactly.
right? You're the 4-hour work week guy?
A lot of it is reviewing credit reports, following up with the lenders. Pretty much.
What's one of the weirdest things you've ever seen on a credit report?
Oh wow!
I always like asking these
I saw one with
questions.
no score. I thought that was a little weird.
No score?
No score. Had one trade line, no score. And I thought that was
one
strange.
trade line and no score.
Oh,
we've
I've
definitely
seen
got
a Canadian credit report
Really?
before, so I thought that was interesting. But
That's it.
obviously, I couldn't do anything there for them. So
pretty good, eh? Is that what that's pretty good credit, eh? Okay, so no score, Canadian, definitely Canadian. That's weird. Just kidding. What else, man? You know, we funded some. I think I mentioned this. We funded somebody last week, or maybe it was 2 weeks ago. It was last week. That when he first came into us, had 251 inquiries. Did I tell you that?
I think you did, yes.
251.
Wow.
So that's pretty wild.
I wonder what his score was.
What's the most derogatory things you've seen on somebody's credit?
Oh,
How many bankruptcies? Have you seen someone with multiple
I've seen
bankruptcies?
multiple bankruptcy. I've seen multiple collections account charge-offs.
You ever seen
You
3
name it.
bankruptcies?
No, I only seen 2.
People gotta make it to 3.
No, not yet. I've seen a chapter 13 and a chapter 7 all at once before.
Chapter 13 is a business bankruptcy.
Yep.
And Chapter 7 is personal.
Yeah.
Chapter 11 is business, where you restructure the debt. Got it? All right. What do we got? It's noon.
All right, gentlemen, it's noon o'clock.
Noon o'clock.
Noon o'clock.
Okay.
We're going to be live on Facebook in just a moment.
Awesome. How's the quiet time?
Got the jitters out.
Shake it out.
Now it's time to perform.
Are you ready for Facebook?
I am ready.
All right, going live in 5, 4, 3.
Hello and welcome back to another episode of Finance Agents Live. This is episode number 40, and I am excited to be here today with Ed, who was on last week. If you saw that show, he was talking about our Unsecured Finance program, which is primarily business and or personal credit cards. Today we're going to be talking about some other unsecured finance, which is really exciting because it's growing a lot right now.
Yes, it is.
And we're getting some great results, and our clients are super happy. So we like talking about things that are going well, and that's our personal term loans. So these are personal term loans, and we're going to get a lot more detail about it. But before we get there, if you're new to the show, please subscribe to the show, like the show. The more likes, I'm getting some weird signals from...
We're not live on Facebook.
Okay,
Oh.
we're not live on Facebook.
It was not published from Wirecast to Facebook.
And is it now?
No.
Are you going to do it?
I will.
All right.
They're starting over?
Psych!
Just kidding.
If there's a delay
Redo.
on the shift of our stuff, that's why.
Okay, you're still in the pre-show. Look at that, you got a trial run.
Okay.
It's like they shot the gun, we started running. I had to
Get
start
some
over.
papers up, throw
Yeah.
in there.
Just think, the next one I do will be that much better. Any fun 40 jokes I can throw in there?
Dirty jokes.
40.
40
'Cause
jokes.
It's show number 40. Not dirty jokes.
No, not joke guy.
All right, give us a play-by-play for everybody in YouTube world. What's happening, Darren?
I'm right now trying to get... I'm trying to focus is what I'm trying to do.
All right, we won't talk to you. Okay, back to us.
Yes.
Enough about you. Now back to us. All right, so you're giving the day in the life, a lot of reviews.
A lot of reviews, a lot of following up with banks, following up with clients, collecting. and paying you guys.
Sweet. I like that's my favorite part.
Yeah.
We should start a new series called Unreasonable Client of the Week. What's your last tell us about your last unreasonable client.
Oh, wow.
It's always fun.
I had one where we went through the welcome call, specifically told them that it was unsecured business credit cards that they're receiving. Yeah. She confirmed it, got the funds, called me back, and said, this was not what I was signed up for. I wanted a loan. And the thing was, the mother was the PG.
Oh.
And it got into a little
that's never
sticky
good
situation, but we resolved it.
Okay, cool. All right, so I'm getting some thumbs up here. Well, we're ready when you are, actually. Let us know. 5, 4, 3. Hello, and welcome back to another episode of Finance Agents Live. This is episode number 40. Can't think of anything funny about 40, but it's going to be, I'm excited to be here. I'm here with Ed, who, if you were on last week, runs our Unsecured Finance division. He helps, last week we talked about our business and personal credit cards that people are using to finance their businesses, which is a very popular program we've been doing forever. And this week we're talking about personal term loans, which have been growing like crazy. Our clients are very happy with the results. We've been getting big numbers fast, and so I'm really excited to be talking to you about this. Now, before I go into too much detail though, if it's first time to the show, please like the show, subscribe. Your likes and subscriptions help us help more people just like you. All right, with that, let's go ahead and jump on into it. Oh, and then come back next week. Next week's going to be, I think, an interesting topic. It's getting a loan to pay your taxes. And we're coming up close to April 15th. The business tax filing is March 15th. And you might have not filed, maybe you filed an extension because you're like, well, where the heck am I going to get this money? Well, we have ways that you can get a loan. And then there's other ways you can't do it. So we're going to be going through, I'm going to be here with Rhoda, who you've seen before. We're going to talk through all the different types of financing, talk about which ones you can and cannot use for tax liens, loans, or tax liabilities, a lot of different stuff there. So come back. All right, boom, back to you. Personal term loans. What is a personal term loan? Describe it.
Personal term loan is basically an unsecured note loan where you have a fixed monthly payment for a certain amount of years. For example, either a 3 or 5 years payback, and it's after you're done with it, then you're completed your term.
Okay, all right, so individual loans, and people that come into this program will get a couple of them usually.
Correct.
2, 3, 4. What's the most loans you've done for somebody?
6.
6, okay, so it
Yes.
could be as many as 6. Most of the time, I feel like it's like 3 or 4 max.
3 or 4.
Okay, so individual loans, it funds real quick. So what are the timelines on the funding?
It can be anywhere between a week to a week and a half, depending how involved the client is. Sometimes there are setbacks in case clients are busy. But for the completion of it, it could probably take about 2 to 3 weeks to finish.
Great. Yeah, I've seen people get funds in their account in 4 days. So we're talking you apply, boom, 4 days later, funds in your account. So it's actually the cheapest funding that is fast. Most of the types of funding that we offer, if you need speed, you're going to pay for it. And this is one of those programs that's bridging that gap. One of the reasons we're really excited about it. Automated payments, so you never have to worry about making the payments. It just happens. You can get up to $250,000. I think we actually have a client in here that did more than that, which is not what you should expect, but possible. You can actually get more than that. And then you said 3 to 5 years. I see a lot of 7-year loans.
I see a lot of 5 to 7 years with the lenders I'm working with.
Okay, I know we got a big range there when it says 6.9 to 26.9% interest on the rates. That's a big range.
Yes.
But where do you see most of them ending up?
It's going to be in the low teens or single digit.
Low teens? Okay, so you're seeing a lot
Single
that are
digit.
down even below 10%.
The lowest I've seen was a 5.9.
5.9?
Yes,
Oh,
and that's
I haven't
because
seen that one.
the client had a degree, and that
Okay.
also plays in favor with a discount on the rate.
Okay, cool, awesome. All right, great. So you might be watching this saying, hey, I want money, I want cheap money fast. Well, here's how you qualify. We have 5 simple questions that if you answer correctly to each one of these, you can get funding. I'm not saying exactly how much, but probably at least $25,000, right?
Sounds accurate.
Okay, so that's 680 or better FICO, $4,000 a month or more in personal income as evidenced by pay stubs. You got to actually get pay stubs.
Verifiable income.
Verifiable income, right? Nothing derogatory in the last 12 months, and there can be some exceptions if you have one random late.
Yeah.
Same address and same job for 12 months. So 680 FICO, 4K month in pay stubs, no derogs for 12 months, no moving for 12 months, no changing jobs in 12 months. And there are some exceptions on those.
Yes, it is. There are case-by-case scenario if you're in the same industry, but you change job, that can be one of those exceptions.
Well, let's say you're making 40 grand a month,
Okay.
and you have a 620 FICO score. You think there's something there? We're trying to push the boundaries.
Probably. I just probably have to look at the file a bit
All
more.
right, so we have some NBA stars probably be
Yeah.
able to do that. Making $1 million a month
Yep.
and horrible credit. All right, so we got some example clients for you here. We're going to do 2 now, 2 later, and because I couldn't put the pictures of the clients on there for privacy's sake, put some fun action shots of your man Ed.
Looks familiar.
Fun action shot. All right, so tell us about client number 1.
Well, the client number 1 is probably the first file I ever worked with for you guys.
Really?
And I gave a projection of 65. We got about 79,000 for the client. He was one of those clients who was in the industry for about 20 years, but had an employment change, but we were still able to use continuous income.
Yeah, what's it say with the pension? What
Oh, and
were
he
you
also-
counting his pension as
Yes, and we
his
used
income
his
or
pension.
just part of it? Part of his
We
income?
used his pension in addition to what he was making in income.
Okay, so he had income
And
the
pension.
pension. All
And then we
right.
combined it together, and then we were able to secure that amount.
But if somebody just has a pension, you think they'd be able to get a loan?
It really depends if it can.
Short answer is no.
no.
The longer answer is maybe.
Maybe.
Right?
I'm always a technical person, so I see both sides.
But
you know?
maybe.
Yeah.
All right. Okay, so this funded in 7 business days.
Yeah.
There's about a week and a half.
Mm-hmm.
And then Joe is asking if there's collateral involved. Great question. There are no collateral requirements in this, right?
No.
Now, if you own a house, you're not going to put it as collateral, but do you believe that gives you a benefit in getting a larger loan?
I don't think so. Well, probably for different products, but for this in specific, I don't think
So
so.
far, we don't have proof. We haven't been able to see whether that's true. Okay. All right, so that's client number 1, set of action shots and client number 2. Okay, this is one we just did last
recently.
week, right?
Yeah, so we did this for a client. He was actually originally approved for 200,000, but went through the final approval process. The bank came back a little bit low. Still great results. Projected 150, got 169 through 3 banks, personal loans. Funded in about 2.5 weeks because the client was a very busy individual,
Right.
and it took him a little while to reach back to me. But other than that, he had his own business, paid himself a W-2 verifiable income, and we were pretty solid on this deal.
Yeah, great point. If you're a business owner, make sure you're paying yourself through payroll or consistent paychecks, because that's going to open up this whole other type of financing. Technically, you're supposed to do it anyway, so I won't get into that. But here's a benefit to following the rules. Yeah, so 3 different loans. Larry is asking, are these like our credit card program, where it's several smaller term loans? And that's yes. I mean,
Correct.
almost everybody's going to get multiple loans.
Correct.
Have you had anybody that just got one big loan and they said, wow, that's enough, let me just stop there?
Yeah, I have 100,000, and they said that was more than enough.
Okay, well that happens then, but most of the time, most of the loans I see are in the 20 to 30 range, 20, maybe 20 to 50.
Well, it depends again, but yeah, that's probably the minimum, but the ones that I've been successfully seeing are about 50 and up.
50 and up per loan. Okay, great. All right, so funding range, if you were to sign up for this program, if you could say the right answer to those 5 questions, 680 or better, 4K a month in revenue, personal income by pay stubs, haven't moved a job in 12 months, haven't had derogatories in 12 months, and haven't, there's 5 questions. You should be able to remember the darn things.
Pretty simple.
All right, 680 FICO, 4K month in revenue, no derogatories 12 months, no moving 12 months, no changing jobs in 12 months. If you say yes to those 5, you can sign up. The funding range that we anticipate is from 25 to 250. But where do you see most people landing these days?
Wow, 100, 125.
Okay.
Sometimes they cap us. So
Great.
If you're very strong, yeah, we can shoot for the stars.
And
as you will see later on.
Yeah, we have some fun stuff to show you guys. And if you do this, if somebody wanted to do this and the credit card program, can you combine them?
Yes,
and
you
what
can.
order do you typically do
We
that in?
typically do the term loans first because the banks that we work with are a little sensitive to inquiries. And
term loans first.
yeah, and then
Okay.
after that, then we piggyback with the credit card, which is what we're doing now for the previous client
Okay.
that raised $169,000. So
Great.
we're doing credit cards right now for him.
Probably get 270 for him, huh?
Yeah.
Total. Okay, so funding range 25 to 250, fixed monthly payments, fixed interest. They're not variable. We're not going to change over time. No collateral required. No application fees or upfront fees. Of course, you have origination fees and stuff that comes out of the loan, but no upfront cost to apply. No business age requirements, so it's great for a startup, or if you have a business and there's some reason your business doesn't qualify for a loan, which there's lots of them, then here's a way you can get inexpensive financing without going through the process to get an SBA loan, for example. Some more benefits. What are some of the other benefits here?
There's no restrictions on the use of funds. Like we mentioned, it's relatively fast. We can do it as little as in 4 days. There's no term and no prepayment penalties.
Okay, no location requirements. So I can be in Alaska and get this loan.
Yes.
I could be in Europe. As long as I live in the US, could I be in Europe and get the loan?
On vacation? Yes.
Who knows, right? All right, we haven't had that one yet.
Yeah.
We did have somebody from Afghanistan recently.
Oh, wow.
Yeah, US contractor in Afghanistan. Got a loan. All right, so let's talk about the current, we're going to talk about the current market and what changes have happened over the last few years. Larry is asking if we talk a little bit about income guidelines. So we already said $4K a month. We like to keep it to those 5 simple questions because it can start to get really complex. But the answer to your question is really, how much income do you have to qualify for how much funding? And the answer really comes down to your debt to income ratio.
That's right.
Meaning, if you're making 10 grand a month and you're going to have to make payments of 2 grand a month, between all your credit cards, you're about a 20% debt to income ratio. And then once you get the new loans, it bumps it up. So what do you think that cap is that they don't want to fund beyond?
I think
it's different for every lender,
it's
obviously.
about 50 to 60% DTI. I would say that's the cap.
So if you're at 20, they can fund you up to 60 or so. Okay. Larry's also saying, I mentioned these are good for startups. There's a lot of people that are at a company, they want to go start a business. Maybe they start the business on the side while they're working there, so they still have income. They can get a loan using that and then start the business. I call it a rolling start, right? Start doing something on the side, get it ready, so you don't just go off that cliff.
I think that's one of the best scenarios that you can have.
Right.
I mean, you have solid income coming while you're trying to start your side hustle.
Right.
If you want to call it that, but yeah, those are usually the best type of scenario.
Yeah, you don't go broke so fast.
Yeah.
Right? Quitting your job is a big commitment. All right, so let's talk about the current market. Again, you've been in the industry for 8 years or so. What do you see? What are the changes that have happened over the last couple of years?
Wow. I mean, I know for the last 2 years, this program has been very popular, and I think that as we dramatically change in technology, it will continue to open more doors for people for the term loans. Technology plays a big factor, I believe.
Yeah, why is the tech have an impact on making it easier to get the loans?
Well, a lot of it is just because the interface that you see, they make it a lot easier for clients to use portal-wise. So that's obviously attractive, and I think there's going to be a lot more investors coming in and try to expand in this market, the private loan sector.
Okay.
As technology gets better, there's always going to be room for fraudulent activity. So I would imagine it's going to be a lot stricter in terms of verification process as well. I mean, I'm experiencing that a little bit right now with some of my clients. Example would be FaceTiming with a lender, holding up your driver license just to confirm your identity.
Really? So they'll say, hey, we don't want to just see something in an email. Because they can't meet them face-to-face,
Exactly.
they do FaceTime or Skype or?
Yeah, either one of those, or just take a picture and just upload it into their platform.
Okay.
And there you
All
go.
right.
So it's interesting.
That's
but
interesting.
Definitely, it's gonna be more scrutinizing, I think.
I definitely think it helps right now that we're at the lowest unemployment rate in, I think, 30 years. So there's a lot of people making a lot of money, personal income. The banks have had enough time that they're maybe starting to forget how bad it hurt during the Great Recession. So we're really seeing an increase in lending. And when I started doing this 10 years ago, we were getting people unsecured finance for up to 300 grand. And then it very quickly fell off because we went through just what was really rough. I now see it coming back up. And with this one client we just mentioned who has the possibility to get 275, that would be the biggest unsecured finance client I've seen in probably 9 years. So what that means is cheap money is available fast now, and if you want it, get it before the market turns again or before Trump says something weird which spooks the market or who knows what happens. Because when money is available, you got to grab it. Even if you don't necessarily need it right then, you might need it 6 months from now, and it might not be available anymore. All right, so let's go on to some of the minimum and ideal criteria here. What's important here? We got a FICO score, 700 plus minimum. We said 680. What is there? Does it matter? 680, 700?
Well, the better your FICO score, the better it is in an ideal situation. But 680 is the minimum that we will work on a file. Income-wise, the minimum is 4,000, but the more you make, the better it look. It's all about DTI, making sure that you're able to satisfy the debt on top of the upcoming payments for the term loan as well. So the more you make, the better it is. The lower the UTI, the better it is.
Yeah, that's what I tell everybody. The higher your score, the more your income, the more you're going to get. I mean, it's fairly simple. And obviously there's exceptions to everything. If you have a super high income and super high debt, then it's not going to work. But as a rule of thumb, it's pretty quick. All right, so bankruptcy. Can you have a bankruptcy and get a personal loan?
If it's not showing on your credit report, possible. And there are certain lenders that will, look at that on a case-by-case scenario. But most likely, most of them will lean towards no.
Yeah, we've seen with a lot of funding programs, having a bankruptcy at any point is a serious impediment. There are lenders we can work with, but it knocks out like 60% of the options out there just right off the bat. You can have judgments and liens as long as they are in paid status.
Correct.
Now, one of our rules is no derogatories in the last 12 months. What if a year and a half ago you got a judgment, 6 months ago you paid it off? So it's like you don't have a new derogatory in the last year. How's that?
That's a good question.
Does that count as a new derogatory?
I think as long as there's no ongoing derogatories after the judgment, then again, it might be a case-by-case scenario.
Okay, great. Now, Larry's also asking, is there flexibility on the terms between 2, 3, 5, 7 years? I actually haven't seen any at 2 years.
No.
It's a 3, 5, or 7. And I know some of them will come back and give you 2 offers.
Correct.
If you want to do 5 years, it's this. If you want to do 7 years, it's that. Typically, the 7 years will have a higher interest rate.
Yeah, but
right?
Again, it's a lower monthly payment.
Lower monthly payment?
And it really depends on what the client needs.
And since there's no prepayment penalties, then it probably makes sense to take the longest term to have the lowest payments as possible so that you never end up in a situation where you can't make that monthly payment, and then aggressively pay off more whenever you can if you want to reduce the interest impact. Right?
That's a good plan.
There it is. Awesome.
I have a question.
Darren has a question.
Yeah. So, okay. So you mentioned about the FICO score, and it's being 680, 700. What is if I have a 780 FICO score, but all I have is a Home Depot card and a Net 30 Macy's card, and that's about it on my card credit? Is that good?
Well, that's a great question. Banks wants to see versatility. They want to see not only that you have credit cards, they want to see you're able to make your mortgage payment, i.e. mortgage, if you have an installment, auto loan. So all those variations and different type of accounts will play a big factor in the approval process. If you simply have credit cards, depending on how long it is, if it's fairly old, then yes, we might be able to do something there. But if it's fairly new, then you're still limited in depth of history. So versatility is having diverse trade lines is also important.
Okay, so if you have sort of a hollow credit report,
Yeah.
we don't know the exact impact, but it's not going to help you. With our credit card program, we have sort of a rule of thumb. It's not a rule, it's just sort of a guideline that whatever the biggest credit card limit you have, you could typically get about 5 times that in total funding. Do you know of any rules of thumb like that with the term loans?
Yeah, and well, in terms of projection, there is a calculation that I use. Again, it's my secret sauce.
Secret sauce.
There you go.
All right.
Again, but it's pretty accurate, I would say.
So there is an answer, and you're just not going to tell us.
No, I'm not.
Okay. Awesome. Darren, did that answer your question? Okay, great. All right, so let's keep moving here. PTL documents. What this means, let's talk about what do you need in order to, and we're going to change this from our normal process. Normally you say, what do we need to get pre-qualified? And then after that, what do you need to sign up? This is what's different about this program than everything else, is that if you answer yes to those 5 questions, we don't do a pre-qualification where you send it in and we give you an answer because, frankly, people are looking for money fast and we want to give it to them fast. We have a link right in the show notes right now, and then, or it's actually in the chat, and then afterwards we're going to put it in the notes on YouTube, to the engagement agreement. So you can download that, fill it in, and send it to ptl@financeagents.com. PTL for personal term loan at financeagents.com. Send that agreement in with the items that, if you're showing it on the screen, Darren, that they could see there. It's a complete signed agreement, copy of your driver's license, most recent pay stubs. We need a full month and the most recent ones. So if you only get paid once per month, one is fine. It's got to be the most recent month. And then download a free credit report. We have a link there. You could do it from Annual Credit Report, which is free, or any other services, your Credit Check Total or Credit Karma, whatever you have. Send those 4 things to that email address, and it'll get to Ed or somebody in his department. They'll reach out to you, and they'll give you kind of an idea how much you're going to qualify for, and then we just do it. You already signed up. You're ready to roll. Boom. It's fast and efficient. All right, so let's talk about some restricted uses.
Okay.
There's all sorts of stuff you cannot do with this money, right?
Yes. As far as I know, there's not a lot of restriction.
Or no, you mean no?
No, yeah.
No restrictions.
No restrictions. So, I mean, as long as they give you the money, you can choose to do however you want with it.
It's your money.
Business-related purposes, I would hope.
Yeah, all our clients are business purpose, so anybody we're helping, it's look, the last thing we want to do is get you into a ton of personal debt that doesn't actually give you a benefit. Huge difference between business debt and personal debt. If you spend $20,000 buying crazy boots, you have crazy boots and a big debt hangover. But if you spend $20,000 buying a business that's going to earn you $100,000 a year, that's smart.
Yes.
The boots, not smart. I've said that because he bought 20 grand in boots, right?
I did. Red
cowboy boots. He's got a whole closet full of them. I'm just kidding. All right, so yeah, there's really no restriction. This is a personal loan to you. Use it for whatever you want. Our advice is, of course, use it wisely. Use it for a business purpose, but we're not gonna. There's no screening on that.
Exactly.
All right, so let's go through the funding process real quick. It all starts with our finance agents, who of course refer in all our deals to us. If you're a finance agent and you want to say, hey, I know a ton of people that want this, how do I get the word out? Well, as always, there's 4 ways to create a lead. You either log into the back office and manually enter the lead in there, put in the notes that they're looking for a personal loan, or send out your marketing link. When somebody fills in the form, it'll come to one of our loan officers who will talk with the client and find out if a term loan is the best thing or could be anything else. Or you can email in a lead. If you're emailing a lead, send it to lead@24houropprovals.com. Or with the agreement, if you got the whole package ready, you want to just submit it, then submit it to ubf@24houropprovals.com. Or, of course, you can just call up your rep, just log into your back office and go to your dashboard, their name and numbers at the top, email, whatever. Those are the 4 ways to create a lead. Once a lead comes in, loan officer at one of our member offices is going to talk to the client. For this program, you could do just a verbal pre-qual, and if they're qualified, they collect the engagement agreement, the STIPs, which, as you know, is a driver's license, credit report, and pay stubs, and they'll submit it. After that, it comes to Ed and his department, and it starts the funding process.
Yes.
All right, so talk about the funding process a little bit.
Well, once I get the package, I put it together, do a welcome call with the client, set the expectations with them. Once they're ready to move forward, then I will go ahead and present some soft offers to them, approvals. If they choose to accept it, then that's when the final approval process happens. If everything looks good, it can take about 1 to 3 weeks to get everything done.
What's a soft offer, right? So let's talk through it. So somebody comes to you Monday morning, you're going to call them, or somebody in your department will typically call them the same day or the next day.
Okay.
You'll do the welcome call, and are you already going to have your bank list prepared, or do you talk to them first?
I talk to them first, and then I create the bank list. Once the bank list looks fine, and then I'll go ahead and submit these bank packages. I'll get soft offers back from these banks.
Okay.
The clients present it to the client. Clients accepts all of them. Then I'll let the bank know that hey, they want to move forward, and that's when the initial hard pull happens.
So how firm is a soft offer? Right? How soft is a soft offer, maybe?
I mean, I think it's right there.
Do you see a lot of soft offers that fall out?
I don't see them fall out. What I see is the amount will probably change. The rate will change, but not drastically.
They give you more money.
They give you a
at
lot
less
more. Yeah.
So
It
for
typically
a
gets
firm
cut out.
soft offer, is this like Jell-O or tofu? Like,
Both of them.
Yeah.
Thanks. All right, but typically, I think a client I just saw go through last week, they got 4 soft offers and 3 ended up funding.
Is this?
That was the one we were just talking about. The
Oh,
one
yes,
that was just
yes.
up there. The one that didn't fund, what happened with that one?
There was actually, there's 3. Let me see, I'm going to think about this. The
3
fourth
funded,
one,
one fell
the
through.
last one fell through.
Because they're pre-qualified for, they got 200 grand in instant approvals.
Yes.
But then only 169 funded, so something happened to that 31. What happened?
Well, what happened was we got 3 approval. One was 100. The other 2 was 50 each. The one that gave the 100 gave a counter offer of 69.
The 100 dropped.
The 100
okay,
dropped.
That's what it was.
That's what I mean.
So they got cut. All right, well, there's an example of that.
There you go.
Okay, client number 3. Now, this is a real small one, so you could probably just ignore it. I'm just kidding. Tell us about this guy. Guy or
this
gal.
person was an associate working at a medical facility. He wanted to start his own practice, so he obviously gets paid pretty well. And
Yeah,
from
$19K a month. That's
verifiable
pretty shabby. That's
income.
$1,900 a month is what that is, right?
No.
$19,000.
And then his FICO was pretty stellar. We got 315 through the course of 6 personal term loans for him.
Yeah, that's an interesting way to finance a new practice because we could do a whole practice
Yeah.
loans probably. Any idea why he went this route as opposed to a typical practice loan?
I am not sure.
Okay. All right. Well, anyway, fine with us. All right, so next client, last client. Let's talk about this one. What do you got?
This client here.
Glass company person.
Yes, glass company. It was actually a husband and wife file. We worked on the husband first. He owned a company, paid himself a W-2, pretty solid income. We got about 215, but I think he only accepted 200. The wife came on. There was some inconsistency with her income, which the bank couldn't verify. So at that point, we basically switched her to the UBF program and secured $42,000 for her.
Okay, great. So all told, that was like 260 or something.
Yep.
An interesting thing, if you're used to our credit card program, then you know that if you submit a husband who has good credit, you could typically tack the wife on and potentially double the amount of funding they could get because it's just based on the credit. This is, of course, different. You have to have income. If both the spouses had a similar income and similar credit, which is less common, then they could both get the same amount. You get double amount of money you're going to get for that couple. Yep. But more frequently, if she has good credit, she could get into the credit card program, and he would do the loans, or vice versa. All right, so we got some terminology here. As you know, this is my favorite part of the show where everybody falls asleep. Aggregate. What's the lightning round? What's an aggregate?
Aggregate is basically a combination of several loans put together.
Right.
So, you come through a course of about 3 to 4 banks equaling a aggregate amount.
Right, so you're going to get a few loans total for your total funding amount. So when we say 300 from 6 loans, it's not 6 $300,000 loans, unfortunately. That'd be more fun. But 6 loans that total that amount.
Yep.
Credit utilization ratio, this relates to DTI,
Correct.
debt to income. What's the credit utilization ratio?
It's basically your monthly obligation versus your income. And look really thoroughly on that.
Okay. What are the things besides just debt payments that they're looking at? So are they asking your rent, for example?
They do. Sometimes they do factor that in there.
So they look at your debt, which they pull from your credit report, their rent. Is there anything else they stick in there? Is it just really those two?
Your monthly credit card payments, your auto loans, monthly auto loans, your monthly mortgage. The thing about mortgage is that if it's a joint, and let's say it's a $2,000 mortgage, you split that.
Oh, so they only count half of it
Yes,
against you.
Exactly.
Okay. All right. Awesome. Fraud alert. Now, if you are in our credit card program or you're trying to get in and you have fraud alerts on your report, and if you were on last week, you may remember that a lot of people have fraud alerts because they signed up for companies like LifeLock, which really all they do is they stick a fraud alert on there and give you an insurance policy. So a lot of people come in with fraud alerts. You have to have them removed for the credit card program. What about for personal term loans? Do you have to remove them first?
Yeah, I think you would have to remove them.
Okay.
And before we begin the process.
So you're not positive. We've just removed them because they're relatively easy to remove. You just got to wait a little bit.
Yeah, you just gotta wait. But it does make the process a little bit smoother rather than getting scrutinized
Right.
at the end. So
Now, something we see a lot is people coming into the credit card program where they have too much debt and they need to pay down their debt before they can get approved.
okay.
Is it exactly the same with the term loans?
No, it's a little bit different. You can actually have maxed out credit cards and still qualify for personal term loans. Again, it's all about your debt to income ratio. So if you can satisfy the monthly payment, then you should be okay.
Then that's what they care about. Okay. All right. Now, limited power of attorney is something we have in here. We explained it last week, but we don't actually have it with this program. If you open up our engagement agreement, again, the link is right in the show notes. You can download it, sign up. There's no limited power of attorney, and that's because you're literally going to be as a client, you will talk with each bank.
Correct.
Before the funding happens, so they're working with you directly. We help set everything up, get you on the right path, and then that final step is you talking to them. All banks have a final call before funding, right? Any banks do multiple calls?
Well, sometimes they'll have an initial welcome call, either to grab additional documentation, but very few.
Okay.
Yeah.
All right. Origination fee. So there's really two parts to this answer, but let's just start off with what's an origination fee?
It's basically a fee that the lender charges for the loan.
Okay. And then how do they charge that?
It can be either a flat fee or a percentage of what you are qualified for. So let's say origination fee is $1,500. You were approved for $100,000, so you will get back $98,500.
Right. So what it means is you have a loan for $100,000, but you only get into your account the difference between the loan and whatever the origination fee was, if it's a flat fee or a percentage. Now, when I said there's two answers to this, excuse me, I'm dying all of a sudden. There's two answers to this. There's the lender origination fee. What are the ranges in lender origination fees that you're seeing?
Either 1 to 3%.
Are there any with no origination fee?
Yeah, most of the banks that I work with will have no origination fee. If I do work a file, there might be only one bank that offers that.
Okay.
Hopefully not.
So you got banks and alternative lenders, and so the banks typically won't have an origination fee. The online lenders will. What's the biggest origination fee you've seen from an online lender?
Ooh, I think 3% of the
3%.
loan amount.
All right, so anywhere from 0 to 3%, with most of them around 1 to 2. You should expect that, and that's one side of it. The other side of it is our service, when we are helping you, has a 9.9% origination fee on it. That is our service fee. That is not to be confused with the APR on the loan or the lender origination fee. So if you got a $100,000 loan, you're going to pay us 9.9%, which would be $9,900. That is due after the loans happen. So there's no upfront fee. It's after funding. You pay that to us for the service. All right, next is TIL. That's the Truth in Lending Disclosure. What is that?
It's basically your standardized document summarizing the loan in full. It talks about your monthly payment, when the term ends, the total payback of the amount that you borrow.
Okay, so every loan that's coming out now has a standardized form. It's mandated by the CFPB, the Consumer Finance Protection Board, which makes it simple for you to see the loan amount, how much you're actually going to get, what are your monthly payments, what's the difference between the interest rate and your APR. And pop quiz, what's the difference between interest rate and APR?
Your interest rate is a fixed rate. Your APR is basically the cost of the loan rolled into a form of a APR rate.
The total cost of the loan, right? So let's say, to make the math simple, it's 12% interest, so 1% per month. That might be the interest rate, but if there was a $2,000 origination fee, they factor that in over the life of the loan, and your 12% interest rate might turn into a 13% APR.
Correct.
Great. All right, prepayment penalties. They don't got them.
They don't have them.
None of them have them here.
So you borrow it, you get funded one day, realize you don't need it, you can just pay it back the next day.
Pay it back. All right, awesome. And last but not least, unsecured. What does unsecured mean?
Basically, there's no direct ties to any collateral, but other than personal guaranteeing the loan.
Right, so
they're not going to ask you for your house.
Right.
They're not going to ask you for cars, any types of property that you may own.
Great. Yeah, so a lot of people hear unsecured finance and they get excited in the wrong way because they think it means there's no personal guarantee. Unsecured just means there's no direct collateral. There's no immediate lien. Like in business lending, they often put a UCC lien on your business. On a house, they might put a mortgage. None of that. It's simply a personal guarantee, so it's really a signature loan, if you will. But there is a personal guarantee, so if you default on it, don't do that. Don't default, right? Just make your payments. Okay, well, we do have time for some more questions. But again, don't forget to come back next week for our fun How to Get a Loan to Pay Your Taxes. I think that's going to be interesting. We're going to be doing a lot of researching over the week, checking with different lenders, see what their flexibility is, and we'll be talking about that then. And I'll stall a little bit more in case we have some more questions. While we're waiting, what else do you want to talk about? What's the most interesting personal term loan client you have? What is it? Maybe an interesting use of funds, or maybe
getting $315,000 was pretty.
That's pretty nice. Yeah, let's do more of those. If you're a doctor, you want to open a practice, you're making 20 grand a month, please call us. We'll be happy to help you.
Yep.
That was a good one. All right, well, I don't see any more questions come in, so I guess we'll go ahead and wrap it up. Ed, thank you again for coming on the show.
My pleasure.
Thank you all of you for your attention. Again, subscribe, come back next week, and we look forward to doing a lot more deals together. Cheers.
Cheers.